Is there a way to gauge the economic impact of what we're seeing in Hong Kong? Growing protests there, obviously the protests over Brexit, maybe in the past, but the anger is still there as well. Is there a way to gauge this, quantify this mathematically or economically?
Thanks, Brian. Well, it's pretty early days to be doing that. But yes, I guess the big issue here is ultimately whether or not the legacy that the British left in 1997, which is of one country but two systems, remains intact going forward. And of course, that could, you know, if this spirals, could affect relationships between particularly the US, Britain, and China. And of course, that's another issue, if you like, that we could add to the whole list of growing issues between those nations.
Yeah, there's two ways this is going to go. Either the protesters will protest today, maybe tomorrow, the next couple of weeks, and the Chinese government will suppress them and they will go away, or they will continue to grow into something bigger because Hong Kong, they like their autonomy. The mainland is obviously running Hong Kong, but in some ways they even speak a different language. They speak Cantonese, not Mandarin. They are a different people in many ways. If this were to grow, what would that say to you economically?
So I think if it were to grow, it could cause all sorts of tension within Hong Kong itself. The biggest issue, I guess, in the longer term is what happens to the Hong Kong peg, which has been a beacon of stability in Asia for quite some time. It could come under pressure, but, you know, I think you'd have to have certain sort of combination of events for that to happen, and I think that's still a long way down the road. What we're going to have to see is how this exactly works out, because at the end of the day, the big issue here is one country, two systems.
You know, and I'm really asking you to go off script, and I appreciate you doing it, Shamik, because this is all happening real time right now. Tear gas being fired, the police saying they had to use a, quote, weapon to suppress at least one protester. We don't know what that might be. All this is occurring, of course, as the United States is trying to negotiate a major trade deal with China. I hate to just call this a distraction, but you know what I mean. If you're Xi Jinping, you're dealing with Trump, and now you're dealing with this.
Absolutely, and in some ways the pressure's building on China quite significantly, and this is another aspect. You could easily see, for instance, this becoming another tool, another element of leverage, if you like, that the West could use against China going forward, asking it to respect, if you like, the existing system within Hong Kong. But how the Chinese react, of course, is, you know, we're yet to see.
All right. The reason you were here is to talk about sort of the way that the global economy is shaking up. We've got this shaping up, although shaking up might be appropriate as well, Shamik, because you've got all this manufacturing data, which is not weak, but it's beginning to weaken. All in a way that the stock market, at least here, has done pretty well. Germany seems on the rise from an equity perspective. Is one of those telling an incorrect story?
So, look, I think this year it's been puzzling for economists. I think, you know, yes, there's a slowdown in trade. Yes, the manufacturing slowdown has maybe been a bit bigger than we expected. On the other hand, we don't see a recession ahead. I don't think most economists don't, not a global recession. And given that's the case, you know, the behaviour of the bond market in particular looks a little bit odd, I think, to some of us. The only thing I'd say about
odd or wrong?
Being an economist, you always hesitate to say the market is wrong. But yeah, on balance, I would say wrong in the sense that, look, the risks are rising and the probability of an insurance rate cut is definitely going up. On the other hand, you know, the basic, you know, situation of the US economy is still reasonably robust. It's at 3.5%, at strong consumer and household financial situation, you tend not to get recessions. And yet the bond market is pricing in basically a kind of recessionary situation.